Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, August 31st. Don't forget to run your video player at 1.25x to increase your efficiency a little bit. It is 6:38 as I'm starting the video. Taking a quick look at futures. Oil down about 1%, copper down 0.5%. Equities are more or less flat. Gold is up 0.4. And if you're interested in gold, the overhead resistance area that I have is a little zone between 1835 and 1837 on your gold chart. So you can find the levels. They're pretty clear on the GLD and on the GDX if you prefer to trade those. But this is off of the futures chart. On stock charts, that's $ gold if you want to pull that chart up. But the key levels that I have are 1835, 1837. Just consider that a band. It's been a kind of a widowmaker lately. A lot of choppy trading, a lot of head fakes, but I'm still bullish longer term, but it's got to take out that overhead resistance. Okay, on macro front, Red Book, Case-Shiller home prices. We've got another pricing, housing pricing index as well. Chicago PMI and consumer confidence number here this morning. On the earnings front, we've got FUTU, FUTU on before the bell. We've got CrowdStrike, PVH, and Ambarella after the bell. Just to note, I'm not going to go over the chart, but Zoom was down about 10% after earnings last night after the bell. If you're one of those guys that like to play that opening range, you may get a nice trade there. Otherwise, that'll set up for a really nice bracket trade tomorrow, where, of course, you mark the high and the low of today's range and then follow price outside of that range when and if it makes a break. I really like those trades because it's very clear what you're trying to do, and you got very distinct lines to shoot against, which keeps things very objective, which I like. Okay, starting out here this morning. Yesterday, we saw a dip in yields. We got yields coming down below that 1.3%. And, it's been kind of remarkable. We had this downtrend channel, and once we drop below, notice here when we got a kickback rally, we came right into this 1.4%, also hitting the downtrend line. And then we did all this action down here. When we came up, we again got rejected at the downtrend line, came down, came back up again, and got pretty darn close to that trend line again. So looks like something is definitely there. I would like to see yields back up in this 1.3 to 1.4%. Why? Because and we saw this yesterday, when you drop down below 1.3%, it seems like none of the reopening trades work. They were all down yesterday. Banks, airlines, cruise lines, what else? Banks, all that stuff was down yesterday. And if you've got any kind of diversified book, you're really going to feel that. And IWM is another one that's going to not really do well in a falling yield environment. So I would much rather see yields up in here, but you don't always get what you want. But anyhow, I would like to see yields pop up here. If they continue to fall, That's going to really favor tech. We saw that yesterday. A lot of the mega cap tech and lower level tech was really working yesterday. And so what I've noticed in past trading is it seems like either IWM or the Qs are working. It's tough to get them both working at the same time, and that was back here. We had that. We had the Qs advancing and IWM advancing at the same time. So that's what I'm going to be looking at today. I checked out all the oscillators, all the breadth stuff and everything. I don't think there's really any changes to go over. I'll keep you posted on that. One thing I did think was interesting yesterday is our equal weight SPY was red. Wasn't red by a lot, but SPY was up a healthy margin. I think it was like 0.6%, and equal weight SPY did not participate. And that's a function of we didn't see IWM participate. The lower cap stocks really didn't do much yesterday. It was mostly the real large cap stocks that the market cap weighted stocks did the best yesterday. So here's SPY 2 hour. We're at the top of the 2 hour channel. This would be a place that if it wanted to pull back, there would certainly be a technical justification for it. That's what you expect to see when you run into resistance, a little pullback. I think as long as price holds 451, I think it's fine. I think that would be a place where you could be a buyer there on any kind of pullback. If not there, into 449 at the midpoint of the range. Now remember, if we break out, if we break above this channel, then that becomes support going forward, right? We would break out here and possibly come back to back test it. Be looking for that if we get some kind of a move today or in the next couple of days to break out of the top side of that channel. Here's a 30-minute chart, just exploded. You can see we've been on quite a little run here. I've dropped in a little minor support at 452. I think if you lose that, you're going to come back to this little opening gap from yesterday that didn't get filled down around 450.75, something like that. It's not much of a gap, but it is there. Qs. Really nice move yesterday. I hope you got some of that. This was the Friday move. Big impulsive candle. Then a couple little consolidation candles. Gap and go yesterday. I mean, straight out of the gate with a little, consolidation final bar yesterday. I've got support at 378.50 on the 2 hour chart. I think if it pulls back into this area, you could buy it there against the lower part of this candle right here at 378.50. But then just like SPY, we've got a little gap below that that'll need to get filled at some point. Here's the 30-minute chart. On this particular level, I've got a little shelf at 379.5, and then you've got your gap down here below. So getting a little extended, but I'm in the chat room. I keep my eye on other chat rooms. I don't really participate in them. I just like to keep my eye on them, see what people are saying, and I'm getting to hear a lot of that due for a pullback. I'm starting to buy puts. I really want to discourage you from doing that. It's okay if you want to buy some protection. That's totally different. But the idea of, I'm going to buy puts right here because we're, quote, due for a pullback, I think that's a losing trade. Why? Because we're in a strong uptrend. And we can stay, here's RSI. But I mean, out on the daily time frame is a better place to look for these kind of things. But my point is, things can stay overbought for a long time, and if you're always trying to call the top, then you're losing on all those trades. I think right now it's better to be long. If you're out there long in a big way, I mean, the VIX has been crushed. Now is the time, if you want to hedge, going into a Labor Day weekend. We got a 3-day weekend coming up. If you want to lay on some protection that will carry you, say, into September in that FOMC meeting, then that's fine. Because, I mean, it's about as cheap as it's going to get right now with the VIX slammed. But I think that's a better way to go than, trying to make outright bearish bets at this point. IWM, I mean, when you look at a chart, I mean, this is fully expected after this run. Came up and touched 227 more or less, pulled back to this 225.5 this morning. I mean, we were green in the pre-market, but kind of wobbly. As I said in yesterday's midday note, if you haven't participated in this run-up, that's fine. If you get a pullback into 224, I would expect that to hold. And at the very least, it's a very objective long entry, because I regard this as a breakout. Why? Because we've been pinned under this level for quite a long time, and now we've broken out. So just like we do on an actual breakout, you could see the breakout and have price come back for a back test of that breakout and then find support and go. So, I mean, I'm already in. So, I've got some long calls. So, anyhow, what I'm trying to say is, if you're not in, I would still pay attention to this chart, because I think cyclicals and small caps are going to get going. And that's what I think is neither here nor there. Trade by level to level, as we always say. So if this comes back to 224, you've got yourself a very tight long entry. Set your stop just below and see if it doesn't get a bounce and go up here towards 233 and 234. That's the upper end of the big trading range. So that's my target on this run. So a lot will depend on if we can hold this 224 level. 30-minute chart. Here's the trading range here, intermediate trading range. So based on this breakout, the measured move is up to 230. But if we were to go to a daily chart, you'll see that the big box goes from 233 down to 211. And that's the one that I think we're going to go up and tag the top of. So here's a couple little levels for you if you're interested in actively trading IWM. Now, before we get into FAANG, I want to thank any new visitors to the channel. I really appreciate you being here. I think if you learn to trust my levels, I think you'll find that they're pretty good. I think they'll help you in your execution. If you can focus your attention on executing around those levels, I mean, that's the one thing I can't do for you is buy and sell. So lean on my technicals, focus your attention on execution, and I think you'll see some nice improvements in your trading. If you'd like, jump over to the show notes. I've got a link in there to the blog site where you can register for all my content. That way you'll get an email morning, noon, and night whenever I publish content. That would be great to have you. And then you'll also get an invite to our trading room, which has gotten pretty dynamic lately, which I really appreciate. Got some new traders that are not bashful about sharing their ideas, and it's we've got a good group going there. And of course, longtime subscribers, I appreciate your support so much. Let's keep it going. So as I get into Fatman, I'm going to toggle between the daily charts and the 1 hour charts, because we've had some developments that I think merit looking at the daily charts instead of the 60-minute charts. So Facebook, we had a big breakout yesterday where we had a gap in here from about 364 to 368, 373 was the top of the gap. And we got a big impulsive breakout that took us up to, over 380. So now you can tell that within this channel, we had spent a lot of time consolidating here into the lower side of the channel. We've had price walking up the 80 MA. Hard to get bearish when, price is above all the moving averages. And now we got a breakout to all-time highs. So as far as Facebook's concerned, just stay long against 375. And I think as long as it holds 375, the breakout holds. And you can see that we've got a good amount of running room to the upside, and this thing could actually see 395, 400 in the weeks to come. So I think that was a pretty significant breakout yesterday. We also had a breakout in Apple. We have been toggling between 150 and 141, grinding our way up within an ascending triangle. You see it here. And then yesterday we got an impulsive move. So we're up here around 252.75. I think on this little move here, we could see up into the 158, 159 area. And the way I got that is you could either call this a trading range of $9, or you could call this a just an ascending triangle. And the way you get your measured move from that is at the widest part of the triangle, which in this case was between 141 and 150. So your measured move breakout is going to be 159 in that scenario. So hopefully, if you were interested in Apple, you caught that breakout yesterday, and I would just stay long against 150. If you got a back test and you weren't in it, you can go long on that back test of 150 with a stop just below, and that would be perfectly objective and a perfectly good trade to make. Tesla. We had a nice move yesterday, 2.67%. We are in this gap that I have marked from 720 to 740. The reason that I wanted to show you this daily chart is to kind of give you the overhead levels that I see, assuming that price continues its advance. I see if we can close this gap at 740, I think you've got a runway up to 770, which was this prior high over here. And then above 77 or 770, I think you've got some running room, at least up into the 800s. I don't have a level, but you can see that there's a volume over price bar here that would give you a little resistance around 800. But then 840 would be another target overhead. But first things first, got to finish filling the gap at 740 and then on to 770. Microsoft. Impulsive candle. And then the rest of the day, consolidation. This could be construed as a bull flag, in which case you would want to alarm, say 304, 304.25. If you get a breakout there, you can buy it, or you can just set your alarm at 305 and then buy it there. So I think Microsoft is going higher. It hasn't been, we got the impulsive move. It was actually one of the first FATMAAN names to really make the move. And, here we saw it. Came up here. I regard all of this as just profit taking. And now I think we're starting to get back on track. Anything over 305 is going to be blue sky. So even if you've never traded it before, never were involved, and this is the first time, all-time highs you got to buy. So you get a breakout above 305, I would be a buyer there. Amazon, nice day. Broke above this 33.75, which we said yesterday was our pivot. Got a nice impulsive move up to 34.40. I think that's your pivot. You can look at this. Again, looks a lot like a bull flag. Set your alarm at 34.40 if you're interested in it. And then I think on a breakout there, I think you're going to go to 3,500, 35.10, something like that on a, there's technical resistance here, but also you can see that's pretty much where a measured move out of this bull flag would take you. Google just keeps grinding higher. I mean, like I said, I think this is a stock where you just camp out long and pick your spots if you get a pullback into support where you could be a buyer. Now here, if you got a pullback into 28.40 down here where this consolidation was, I think that would be a good place to initiate along there if you weren't involved, during all this. But otherwise, you get a breakout above 29.10, then you're back at all-time highs again. So continues to be really, really strong. Netflix, back to the daily view. We've been in this $90 trading range for a year, and now we're starting to make a move out of that range. We did have a couple of false breakouts back early in 2021. I've put in some little overhead resistance points. One here, let's just call it 570. You might see some resistance. And then above that, the prior high at 585. But coming out of this big $90 range, I think what you're really shooting for is to stay long against 560. buy yourself some time, and you're looking for 650 on a measured move basis. 90 added on to 560 gives you 650. That's where that number comes from. So if you're an ardent Netflix bull, you want to take out this 570, then 585, then it's on to 600 for Netflix. Semis. Good day yesterday. Well, take that back. Gapped up and then consolidated the rest of the day. I think as long as it holds 270, 250, I think bulls are fine. I've dropped in this little rising channel. You don't want to see 272.5 break. Otherwise, you could get a backslide into 271 and potentially all the way back to 268. But right here, right now, I think it's still along all the way. Remember, this is blue sky country right in here. So there are no, natural sellers overhead. And also remember, back from our trading range, our trading range was $35, and our breakout from roughly 260 is going to take you to measured move target between 290 and 295. And so I think we got a good $20 to go on that measured move basis. So we'll see if that happens. AMD was frustrating yesterday. Got a big opening candle and then they faded it. So today, I think on any break back above 112, you can get long and look for 117. But yeah, yesterday was kind of soggy. And then here was Dick's, our bracket trade setup from last week. We had this gap on earnings, which we bracketed 129 and 135, 134, depending on where you put it. And then we got a breakout Friday and then a follow-up move yesterday. So Dick's looks good. So stay in that trade if you're in it. Today on Zoom and any of these other ones that are reporting, if you get a measurable gap, use that gap trade or use that bracket trade in your setups going forward. And like I said, I really like that setup. And I think you will too if you keep track of them and try your hand at a few. So just recapping, we got a low liquidity week, really the last week of the summer, heading into a 3-day weekend. Charts are undeniably bullish in most instances. Try to push those feelings of, we got to have a pullback. So, I'm going to fire at puts and I'm going to get out of all my longs. Let price be your guide. Right now, prices are driving higher. They may go higher than we expect, or what any normal person would predict. That's what markets do. They surprise you. So stick to your discipline. If you get a position that you find is getting deep in the money, like when you got a double or up 150%, you got to roll those strikes higher to even money. Why? Because this market will correct at some point, and you don't want to be sitting there with all those embedded gains on that day where we get, a 2% pullback, because that would really hurt. So keep your exposure in line, keep your stops and your strikes tight. Be ready for anything, but right now I see higher prices. So we'll see how that plays out. Hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.